Welcome to the deep dive. Today we are plunging into the, well, honestly fascinating world of digital advertising. It's a market that's just so vast, it's almost hard to wrap your head around the scale.
It really is enormous.
Yeah, I mean, consider this. The global advertising market is this colossal beast, right? And yet, the Trade Desk, which is a pretty significant player, currently commands less than 2% of it.
Less than 2%.
Yeah.
That's barely scratching the surface.
Exactly. It's not just room to grow. It feels like a vast, untapped ocean. It suggests TTD is, maybe only at the very beginning of potentially reshaping things, unlike some mature sectors where market share is sort of fought over inch by inch.
That's a great point. It immediately makes you wonder, okay, how does a company with such a tiny slice of the pie, relatively speaking, plan to carve out a much larger piece, especially when you've got these entrenched tech giants already there?
That's precisely our mission today. We're going to untack the Trade Desk ticker symbol TTD for those following along. We've been digging through a detailed stock report, pulled insights from the latest earnings call, looked at various analyst views, and scoured relevant news.
Lots of material to cover.
Definitely. And our goal isn't just to list off facts and figures. It's really to cut through the numbers, the market jargon, and pull out the most important nuggets about TTD. We want you to quickly grasp its strategic position, really understand its financial health, and maybe get that aha moment about where it fits in this whole evolving digital economy.
Sounds good. So where do we start? What is the Trade Desk at its core?
Okay, fundamentally, the Trade Desk is a technology company. They operate this self-service, cloud-based platform.
Right, and it's specifically for the buyers of digital advertising.
Yeah.
Think of it like a really sophisticated command center. Advertisers can go in, create, manage, and optimize their data-driven campaigns. Gives them a huge amount of control.
And what's impressive is just how broad it is. This isn't just for, say, banner ads online.
No, not at all. It's comprehensive. Covers everything: display ads, video, audio, native content that looks like regular articles, even social media ads.
And crucially, it reaches across all the devices we use constantly: computers, mobile phones, and this rapidly growing area. Connected TV, that's a big one we need to explore later.
Absolutely. Connected TV is a major growth driver. Their whole aim is to give advertisers this unified, efficient way to reach audiences across the entire open internet. That's a really key distinction, the open internet versus those proprietary platforms.
Okay, let's put some numbers around it. Looking at their current scale, the Trade Desk has a market cap around, what, 43.8 billion US dollars?
Yeah, roughly that. And their last reported close price was $89.58.
Okay.
Though the day before our source listed it, it was $88.33, just for context.
Good clarification. And for those of you tracking valuations, our estimated fair value for TTD is sitting at $78.53, but the price target is higher at $108.50.
Which implies some expected upside.
Right. And just to give some context on how the market views them, their trailing price-to-earnings ratio, the PE, is, well, it's quite high at 107.59.
Wow, yeah.
The price to sales is 17.05, and price to free cash flow is 63.87. These higher multiples usually signal that the margin is baking in some very significant future growth, right? They're showing confidence in the strategy.
Definitely expectations for growth priced in there. And just mark your calendars. The next earnings release is set for November 5th, 2025.
Okay, so we have a handle on what TTD is. Let's peel back the layers now on what analysts often call their narrow moat, that competitive advantage that really sets them apart.
Yeah, the rote. What makes them defensible? A huge part of it, maybe the primary part, is their independent positioning.
Okay, independence. That sounds crucial, but can you break down why that's such a powerful differentiator for them? What does that actually mean in practice?
It's absolutely fundamental. The Trade Desk is the leading independent demand-side platform, or DSP, and they're focused specifically on the open internet.
Right, the open internet, not the walled gardens.
Exactly. They don't own the websites, they don't own the streaming services, they don't own the user data in the same way that, the walled gardens like Google or Amazon do within their closed ecosystems.
So they're neutral.
Precisely. TTD's objectivity means their interests are completely aligned with the advertisers. They act purely as an unbiased agent, helping their clients find the best possible value and reach across the entire digital landscape, not just pushing them towards inventory the platform owner also happens to own.
That makes sense. Advertisers want the best reach, period, not just reach within one company's playground.
Right. They want to reach everyone, everywhere, efficiently. And TTD provides that objective path.
Okay, so independence is key. What about their tech? You hear a lot about their platform.
Oh, yeah, their technology is another major pillar. They have this platform called Kokai, and it's powered by their AI called Koa AI.
Kokai and Koa.
Yeah.
Got it.
Yeah, and this isn't just marketing speak. Think of Koa AI as this advanced brain behind Kokai. It uses machine learning, analyzing just vast amounts of data in real time to optimize the ad campaigns. It finds the most efficient ways to reach the right audiences.
So it delivers actual results.
Tangible results. We're talking lower cost per unique reach, better conversion rates for their clients, things that directly impact the advertiser's bottom line.
And that creates stickiness. Right.
Absolutely. That kind of deep integration of performance creates meaningful switching costs. If you're getting great results with Kokai, why would you go through the hassle and risk of leaving? And the company's pretty confident they expect all their clients to be transitioned over to Kokai by the end of the year. That tells you something about its success.
Okay, so independence in tech. What else are they doing to strengthen their position?
They're also really focused on the ecosystem and transparency. They've launched initiatives like OpenPath.
Open Path, what's that about?
It's designed to basically cut through the clutter and hidden fees that often exist in the ad supply chain. It tries to provide a more direct connection between the advertiser and the publisher who actually has the ad space.
Like clearing out the middlemen?
Kind of. Imagine it as creating this clear, unblocked highway for the ad dollars.
Right.
The idea is the advertiser's money goes further and the publisher gets a fairer share. More transparency, more efficiency.
That sounds like something both sides would want.
Definitely. And tied to that transparency theme, they made a really strategic acquisition recently, a company called Sincera.
Sincera. Okay, what do they do?
It's all about improving data insights and transparency within that ad supply chain again, giving advertisers a better view of where their money is going and what they're getting. And interestingly, the plan is to actually make some of this data freely available to the whole ad tech community as open Sincera.
Really? Giving data away.
Yeah, it's quite a bold move. It's aimed at fostering industry-wide transparency, sort of lifting the tide for everyone by providing better information across the ecosystem.
That's interesting. And what about privacy? That's huge now.
Huge. And they're heavily involved in Unified ID 2.0 or UID 2. It's gaining a lot of traction. This is designed as a privacy-conscious alternative to the old third-party cookies, which are going away.
Right, the cookie apocalypse.
Exactly. UID 2 allows advertisers to still reach relevant audiences on the open internet and measure their campaigns effectively, but it does so in a way that gives consumers more control over their data. It's a really critical piece for the future of advertising in a privacy-first world.
Okay, so that gives us a good picture of their strategy and advantages. How is this actually translating into performance? Let's look at the recent numbers.
Yeah, let's do that. Q1 2025, their most recent reporting quarter, was pretty robust. Revenue hit $616 million.
$616 million. And how does that compare?
That was a 25% increase year over year,
Ah.
and significantly, it surpassed analyst expectations. So, strong top-line growth.
Nice. And profitability.
Also solid. They achieved adjusted EBITDA of $208 million. That translates to a 34% adjusted EBITDA margin, which is quite healthy.
That is strong growth, especially given, sometimes the ad market can be a bit volatile. What's really driving that outperformance? Is it just the market lifting all boats?
Well, the market helps, but there are specific drivers for TTD. One big one is that massive total addressable market, the TAM we talked about earlier.
Right, the less than 2% share.
Exactly. With such a small share of this huge global advertising pie, there's just this extraordinary long-term runway for growth. They don't need the whole market to double to see significant gains.
And are there specific trends helping them?
Absolutely.
Yeah.
Powerful secular tailwinds are definitely at play. The biggest one is probably the ongoing shift of advertising spend from traditional TV to streaming services, connected TV, or CTV.
Cord cutting continues.
It does. As more households switch to streaming, the ad dollars follow. And TTD is perfectly positioned. Their platform is built for this kind of programmatic, data-driven buying on CTV.
Okay, that makes sense. Now, what about the competition? You mentioned the walled gardens earlier. How is that landscape shifting?
Yeah, this is interesting. TTD management actually believes that the increased regulatory scrutiny and antitrust actions hitting some of the larger walled gardens are, in a way, creating a fairer market for players like them.
How so? How does that benefit the trade desk?
Well, it potentially levels the playing field. For example, if regulators pressure Google, maybe Google de-emphasizes its role in facilitating ads on the open internet and focuses more on its own properties like search and YouTube.
Okay.
And Amazon's DSP, TTD argues, is primarily geared towards selling ads on Amazon's own inventory Prime Video, Amazon.com. So as these giants potentially become more inwardly focused, either by choice or regulation, it validates TTD's model.
The independent model.
Exactly. It proves there's a real need, a growing need, for a neutral, objective platform that's purely focused on maximizing advertiser value across the entire open internet, not just within one company's walls.
Got it. So with all these strategic moves and market tailwinds, how does their balance sheet look? You mentioned valuations earlier, but what about their actual financial health?
Their financial health is frankly really strong. They're sitting on approximately $1.74 billion in cash and short-term investments.
$1.74 billion in cash. Wow.
Yeah, and they carry pretty low total debt, around $335 million. So if you net that out, they have net cash of about $1.41 billion. That's a very comfortable position.
That gives them a lot of flexibility.
Huge flexibility. And what's really compelling alongside that cash balance is their free cash flow generation. It's robust. They generated $230 million in free cash flow in just Q1 2025 alone.
$230 million in one quarter.
Right. This isn't just a number on a page. It means they're generating significant cash from their actual operations. They can self-fund a lot of these ambitious projects, the AI innovation, the infrastructure build-outs, without needing to rely heavily on external financing or taking on lots of debt.
That self-sufficiency must be a big advantage, especially in tech where you need to invest constantly.
It's a massive competitive advantage, especially in a capital-intensive industry like AdTech. It lets them invest for the long term.
And are they doing anything for shareholders directly with that cash?
They are. They have an active share repurchase program.
Well,
In Q1 2025, they bought back $386 million worth of their own stock.
okay.
Now, they mentioned this is primarily to offset the dilution that comes from employee equity plans, which is common in tech. But it still shows a commitment to managing shareholder value alongside investing for growth. It's a balanced approach.
Okay, so a strong position. But no company is without risks, right?
Huh.
What are the potential headwinds or challenges? What are the bears saying?
Yeah, absolutely. You
Oh,
always have to look at the risks. The bear arguments often center on macroeconomic sensitivity. Advertising spend is generally cyclical.
sure, it's often one of the first things cut in a downturn.
Exactly. So a volatile economic backdrop, increasing uncertainty,
Ah,
that could certainly impact overall advertising spend, which could slow down TTD's growth rate,
Ah.
even if they continue to gain share.
makes sense. What else?
There's always execution risk, especially with big platform upgrades like the rollout of Kokai.
Yeah.
Even though they say adoption is ahead of schedule, any massive tech migration carries inherent risks.
Like what? Things breaking?
Potential disruptions, yeah. Things that could impact the client experience, or maybe even delay recognizing revenue if there are bumps in the road. It requires flawless execution on a large scale.
And you mentioned the need for constant investment earlier. That's a risk too, isn't it? Or at least a cost?
It's definitely a factor. Maintaining that technological leadership, especially in AI and platform infrastructure, requires continuous, substantial investment. Hiring top talent isn't cheap either. That represents a significant ongoing cost base that absolutely needs to be justified by continued growth and market share gains.
Okay, those are valid concerns. But what about the bull case? How do proponents counter those points?
Well, the bull arguments really circle back to the core strengths we've been discussing. They reiterate TTD's unique, independent market positioning. That's huge.
The independence again.
Right. Then there's the sheer size of the TAM that less than 2% share leaves so much room. The powerful secular tailwinds, especially CTV, aren't going away. Plus, the ongoing AI innovation with Kokai and Koa and their really robust financial health, that big cash pile we talked about.
Does management address the macro concerns?
They do. They often argue that programmatic advertising, because it's so data-driven and measurable, actually becomes more valuable in uncertain times. Its agility helps clients adapt quickly, shift budgets, and focus on what's working. And historically, TTD actually has a track record of gaining market share during previous economic downturns.
Oh, interesting. So they might be more resilient than the overall ad market.
That's the argument. They suggest their platform helps advertisers make smarter decisions when budgets get tight, leading clients to consolidate spend onto platforms like theirs that offer clear ROI.
Okay. So putting it all together, what's the general feeling among analysts? What's the consensus view?
Well, looking at recent targets, the average analyst price target for CPD within the last 6 months is around $100.50, which, compared to the current price, still suggests some belief in upside.
And there was some big news recently, wasn't there? Something about an index.
Huge news. This is a major validation point. The trade desk is set to join the S&P 500 index. That's effective July 18th, 2025.
Joining the S&P 500? That's a big deal for any company.
It's a massive milestone.
Hmm.
What it typically means is, first, increased visibility, more eyes on the stock, but crucially, it means automatic inclusion in countless S&P 500 index funds and ETFs.
So forced buying.
Essentially, yes.
Yeah.
Funds that track the index have to buy the stock, which leads to significant institutional investment and can provide a nice tailwind for the share price, at least initially. It's a real stamp of approval regarding their size, liquidity, and importance in the market.
That definitely signals maturity and stability. Are there any other recent headlines worth noting?
Yeah, a few things that point to their ongoing strategic moves. They announced a partnership with Instacart, focusing on retail media data that's a hot area, linking ad spend more directly to purchases.
Ah, retail media. Makes sense.
They're also expanding their generative AI creative marketplace by partnering with a company called Rembrandt, so pushing further into AI tools for advertisers. And interestingly, they even released a study on ad fatigue in Southeast Asia. Yeah, basically highlighting the challenge of consumers seeing the same ads too many times across different platforms. It subtly underscores the value of their omnichannel approach, which aims to manage frequency and deliver better experiences.
Okay, so lots of moving parts, but a clear strategic direction. How would you sum up the overall picture for TTD then?
I think when you put it all together, the trade desk really appears to be strategically very well positioned. You've got the independent platform, which is a key differentiator. You've got strong financial health, giving them resources to invest. And they are making significant investments in AI, in their platform, in their ecosystem.
All aimed at capturing more of that huge market.
Exactly. All aimed at capturing a larger share in this massive, still growing digital advertising market. And they seem equipped to navigate the macroeconomic uncertainties, perhaps even better than some competitors, because of their model. Their unique position offers advertisers, clarity and control in what's becoming an increasingly complex digital world.
Okay, that leads us nicely into our final thought for you, the listener. Given the trade desk's success so far, navigating this complex digital ad landscape, and their real emphasis on transparency and independence, it makes you wonder, doesn't it?
It really does. How might the advertising industry evolve even further if these walled gardens continue to face antitrust scrutiny, as seems likely?
Right. Could that create even more opportunities for independent platforms like TTD to really flourish and fundamentally reshape how businesses connect with consumers?
And maybe even push things further. What new forms of AdTech, what new innovations might emerge from such a potentially significant industry shift? What happens when independence and transparency become the dominant forces, maybe even more than they are now?
Those are definitely some thought-provoking questions to mull over. And if you found this deep dive valuable, if you want more insights like these into the companies and trends shaping our world, please remember to subscribe to this YouTube channel.
Yeah, your support really helps us keep doing these deep dives. And please hit that bell icon too so you get notifications for all our future analyses. We work hard to cut through the noise and bring you clarity.
Absolutely. Thank you so much for joining us on the deep dive.